Hi, my name is Matt McKinney, founder of Corleo Advisors. Welcome to the Lion's Den. I am here with Josh Howard, our M&A specialist, and another founder of Corleo Advisors. And today, Josh, I have a very, very important question. A lot of clients are looking to us and asking, hey, what is a quality of earnings, right? What is
Yeah.
Q of E? Who orders that sort of thing? And why do I even need to do it? Why is it important?
Yeah. Great question. Right. And this is a question that is very prevalent in today's world because, in this time of modern history, quality of earnings has become even more and more important. Not just as a buyer, historically, this was something that the buyers would do,
Mm-hmm.
but also as a seller as well to do before going to market. So let's break it down what it is.
Okay.
Okay.
Yeah. What is it?
So quality of earnings is exactly what it means. It is going to prove out the quality of the earnings.
Okay.
Okay. I mean, shocker.
Yeah.
Sometimes there's hitting
It's
meanings
a
and
deep
yeah.
breakdown.
So, uh, no, but it's to really prove out the actual quality of the earnings in a couple of different ways. First off, it wants to prove out the revenue.
Okay.
Is the sales, the revenue of the company actually what the system says?
Okay.
Right. And as we know, there's usually two different sets of books.
Okay.
And this is prevalent in all companies, right? It's our taxes, right? And the tax accounting, which is like cash basis accounting.
Yeah.
And then there are the performance of the company through an accrual basis,
Okay.
right? And the accrual basis books really under a gap is a better and more accurate measurement of the performance of the company,
Okay.
as well as the profitability of a company. And so the quality of the earnings wants to prove out around the accrual basis books of what the actual sales are.
Okay.
What's the actual revenue? And it'll do that by deep diving into the trial balance, into the actual cash statements, the bank statements of the business as well, to prove out that what your QuickBooks says, what your Sage says, what your enterprise software financials say actually is accurate.
Okay.
Okay.
Okay. So do you have an example of when you've reviewed some of these things and kind of what has happened with some of the transactions, or maybe hasn't happened because
Yeah.
the quality of earnings?
Yeah, it's a really good question because really what the quality of earnings reveals and why even on the sales side, we're encouraging our sellers to make the investment to do it. We'll talk about investment in a minute.
Yeah.
Because it's a really important diligence item. Right. What you don't want to do is get into the middle of a transaction and a quality of earnings is done on the business and it reveals something really negative. Like there was an accounting error or the actual revenue of the company or the profitability of the company wasn't off.
Mm.
And maybe not in a malicious way.
Yeah.
There was just something that wasn't right
Yeah.
in the books. And as we know, there is no accounting system and no books out there that are 100%,
Right.
right? It doesn't exist, even in publicly traded companies, right?
You're right.
And
Yeah.
so, so an example of this is, recently we were working on a quality of earnings on a buy side project, and the quality of earnings came back where it was actually significantly different from a profitability standpoint of an EBITDA level than what was actually represented by the client.
Mm.
And talking about like $5 to $6 million off.
Whoa.
So pretty significant, right?
So add that into a multiple. What'd that end up being, from a valuation
Yeah, so the
standpoint?
valuation, I mean, they were right at 5.5 multiple, and so coming back off, between on the different years, let's just use the 1 year,
Yeah.
$5 million. That was almost a 27.5 million dollar
Swing.
difference. Yes,
It's a little bit of a swing.
little bit of a swing.
Yeah. It'd be
Right?
like if I ordered a pizza and it was 27 and a half times more expensive than it should have been. It's like, yeah, that 20, no, you know what we're going to charge you for that pizza? It's going to be $340. That'd
There
be like,
wasn't enough pepperoni.
like,
Yeah,
I
yeah,
didn't order that many toppings.
yeah.
But talk about an expectation that you want to crush somebody's hopes, dreams right there. $27 million after quality earnings that depreciates your business and you didn't know about it.
Yeah. That's,
Ugh,
that is
I'm sorry to hear that.
it was a bad day. It was a bad day. Now, however, on the sell side, if you're doing this work and doing a quality of earnings beforehand, then it will reveal some of these things,
Yeah,
right? It'll
right.
show some of the gaps between your accounting system and maybe what this is. Quality of earnings can be best described by a bad word:
Okay.
audit.
Ooh, yeah,
Yeah.
no one likes that.
And so it's kind of like an audit of the books,
Yeah,
right?
yeah,
And we're going to evaluate the bank statements. We're going to evaluate the trial balance. Again, we're going to go through all of the different books, but we're also going to talk to the management team. We're going to ask them questions about, the performance of the business. Was there like one-time events?
yeah.
On the revenue side? Was there one-time events on the operational side of where there was a CapEx expense that was a one-time event in a year and it's not recurring in the future?
Mm,
We'll ask about and look at different other expenses that impact the profitability of the company that were one-time events. And a true quality of earnings, when you do all of that work, what it'll do is give you an exact picture, an accurate picture of the future of the company, of the performance of the business. And so it'll bring in these add backs, so it'll bring in these other things as well.
yeah,
And so that can be on the positive side by doing a true quality of earnings and giving you an adjusted EBITDA, normalized EBITDA, will also help in substantiating the current profitability, but also the total EBITDA available to underwrite from a buyer standpoint. So that
yeah.
can be really positive.
That's awesome. Well, hey, thanks so much for sharing that with us, Josh. I know that many folks were just like, hey, what is quality of earnings? So there you have it. If you'd like to learn more or like to have a clarity conversation about your own personal transition or exit, please reach out to us. There's a link in the chat here below for a clarity conversation where you get to talk to our team and we can help you better understand help better understand what you're looking to accomplish from a transition standpoint. You can also reach us at www.corleoadvisors.com. And we look forward to seeing you again for another episode at the Lion's Den. Thanks so much. Have a great day.